Hello and welcome to the Friday wrap-up brought to you by David Gokhstein and the Gokhstein News Network. I'm your host, Landy, and today is February 27th, 2026. And we are looking at Bitcoin on the weekly because we do have, the weekly close on Sunday. And then we also have the monthly close coming in on Saturday. So we have, an offset of 1 day on the weekly close. And of course, we have a monthly close, which is going to begin the last month of the quarter. So we're in a pretty important time frame right now. And we had a Friday options expiration that resulted in, a little bit of downside price action for Bitcoin. Not anything too crazy. But the quarter is going to be very interesting. But we're going to start with the weekly here and get some of the projections out of the way. All right. Bitcoin is living below the weekly 200 period exponential moving average, which is at right around $68,000. It's like 68,300, which is essentially the close open right here before the breakout to new highs. And this is, before breaking out of the top side of the structure here at 73,835 on spot. And Bitcoin trading below it does give the biased, we did get a retest this week already down towards the lower second. But if we're trading under, 68.3 here next week, I would be looking for a possible retest of the lower second standard deviation, which is going to update on Sunday's close. We're likely going to see it somewhere around the low at 60 to that 200 period simple moving average at 58 and a half or so. I would just call it 58 to 60. That would be the swing zone. To prevent further downside, Bitcoin would have to, of course, close above that 200 period simple moving average. But if we did see a move towards 58 to 60, be aware that we could also see a move to the mid 50s around that $55,000 by this closing low to somewhere around 52 and a half. 52 is a fair game. And then, of course, down towards the 377 period exponential moving average, we have that coming in around the 48 to 50 range, depending on your chart. Here on spot, it's nearing $49,000, which, of course, is the swing high from the pre-ETF launch at 49. And then, of course, we had the sell-off over the coming weeks after ETFs launched down to 38.5, which is a big monthly level. So really important zone. I'll be honest with you. This is fairly low volatility within the bands, which does provide for room to keep walking down that lower second standard deviation. If we did get a shot through the lower second and the 200s, I would be looking for a strong buyback, to be quite honest, because of the expansive posture of the bands right now. It's not set up for anything more than a continuation on a one shot and then probably ride that lower second standard deviation down, either slightly closing above it or slightly below it on a close over close basis if we did get further downside. To the upside, though, the lower first standard deviation is right at, the $74,000 to $75,000 area. A reclaim of 68 and then getting out of the top side candle structure over here on the daily, we'll look at it. It's around 72.2. That's the next area that I'd be looking for. And when you look at where we had the weekly rejection right here, post larger move down to hit $60,000, on the top side of that, we came in on the close open high of this range over here from 2024. And when you look at that, we've got an area of interest. I've got the wrong tools here. What am I doing? It's been a long day, actually. Let's go ahead and take a look here. So we've got the top side here between that essentially 71.3 to 74, essentially. It's 73.835, but that would give us, if we start breaking out of the top side of the range on the daily, I'd be looking 74 to 75 pretty quickly thereafter. Of course, we've got the low over here at 74.4, so you can even pull this right up to the close opens, which is going to put us in and around 78, and then 80 essentially is right above there. So if we break out of like 72.2 and start running, I'd be looking 74 to 75, 75 to 78, and then 78, which is this close to the swing that we saw break down that led to this larger move down around $80,000. Could it continue to push towards, 84 to 85? Hit the low side of the range here, maybe even 86? Absolutely. That would be a really aggressive move up. But on the weekly, does it do anything? No, last lower high is right at $98,000. The only way that we're going to get any kind of significant structural change from here would be to close above $98,000, or more likely is to come up and see something like, especially if, 58 to 60 holds around that 200 SMA and the current low, would be, and this is just an example, would be something like me finding the right tool that I want to use to illustrate this, and that would be the path tool. This is less likely of a scenario, right? Is, come down if this is the low already, or if we get a slightly lower low or go lower, it really doesn't matter. Would be to get a structural change by closing back above the last lower high. What is more likely to play out is even in a really aggressive rally, it would be another lower high, and then we evaluate either continuation below wherever the low is, whether it's here, lower, or even lower than that in a downtrend. And then that, wherever that lower high comes in, becomes the trend break bias, right? That's where things start to shift in a longer term time frame structure, like a weekly. And, you can see that play out in many different ways. You get a lower high, and then you can get equal lows or higher lows and then come up and break it, or you get lower lows and then, you get a closer lower low that needs to be broken, like what we saw in the bear market bottoms last cycle. So just be aware of kind of where the key areas are on the weekly. 58 to 60, right at the lows here and the 200 period. Right below there, look to the close open at around $55,000 to the low 50s in the 52.5 region. Anywhere below there, kind of looking around 48 to 50 initially. And then from there, it's basically 44 to 46 to 48. And then another 2K, there's an area of interest in here around, 42. And then it's kind of looking at 38 to 42. To the upside, above 72.2 or so, I'm looking towards, 74 to 75. The high side of this structure, low side of this structure, anywhere above there. 75 to 78 right around here. 78 to 80. And then 80 to, mid to low 80s is fair game from there towards the 100 period and the bottom side closes of the structure up here. You can even pull in 86. But I wouldn't be looking for too much more, to be quite honest, to the upside. This is all a bearish setup in terms of the structure. And even if the low holds, this is going to take time to work out. So from the daily perspective, this is a compression, and the next expansion has very clear criteria, right? The next expansion really is about looking at the daily structure at 72, 200 or so. There we go. 72, 200, which would be expansion out of the top side of this structure and getting above the upper second and upper third. That'd be expansion into overhead resistance, with the 55 and 50 moving down into key areas horizontally at that 74 to 75 initially. And then we can start looking at 78, of course, where the 50 is. And then further up towards the 800 EMA and 100 EMA, so on and so forth. To the downside, still very, very clear. If we drop this low now, and I would say a bias for testing that low would be anywhere below $65,000 again, which was spiked in Friday's price action. Saturday candle is open right now. Still Friday for me, of course, but Saturday candle is open. But bias would be below 65. We're going to retest this low, right? And then you can kind of draw a zone around this, where between 65 and 62.5 now, if that does not hold up, we're looking for continuation to retest the low, right? So if this doesn't hold up at the low on the daily, between, you drop 65, we're probably going to head towards, the close open down here at 64, probably even swing towards that lower third at 62.5. But if we get closes anywhere under there, that's expansion from this compression into the lows, right around where this close open is that was swung. But realistically, there'd be expansion down into the wick here, which would rope in the 200 period simple moving average at 58 to this low at 60. And then, of course, if that breaks down mid 50s around 55 to 58, and then below 55, 52.5 to 55, and then 48 to 50, so on and so forth on an expansion. So this is going to tell us exactly what we want to see probably soon. And one of the big things that we are looking for here is I'd want to see another couple of drives of bullish divergence, or maybe another drive of bullish divergence as it relates to this current structure, and then break out the top side for that expansion into resistance. Otherwise, it's going to plumb the lows and possibly lower. And we can even get a little bit of a gauge. This will update though. We're looking at enter the bearish control zone below 65.5. That was tested in the Friday candle already. And then really pushing the critical levels down towards the 20 read, and another big rundown would put us all the way in the mid 40s. This would probably update if it continues to compress over the weekend to somewhere around that 48, but anywhere below 48, we're in mid 40s, right? You're looking 44 to 46 essentially as the next big area on a weekly and daily basis. So, and then from there, 38 to 42 being a key level. So just kind of understand the lay of the land. And even for RSI, if you wanted to take a look at RSI, midline is 70,500. That doesn't do much. Pushing up towards the bullish control zone would put us towards 78, maybe even 80 by the time this updates close over close. So, just keep a close eye on it. We're probably going to get some confirmation of expansion in the first half of daily expansion, either to the upside or downside. Beware of fake outs that fail, right? An expansion into the low, right, that fails to actually break and close below usually will lead to a slingshot right back to the upside. And same for upside moves. An expansion into the resistance usually will lead to an initial big move back down. So beware of those. Yeah, that's pretty much all I got for Bitcoin. It's very, very easy, the range right now. It's just kind of boring for most people as we've been consolidating on the lows here, awaiting the next move, either to retest resistances or to get continuation, right? When looking at something that I haven't brought up in a while is the bond markets. And this is interesting. I was having some discussions across various stages today for Spaces events on X. And, I think a lot of people are surprised with some of the news that's coming out about, the nuclear talks kind of falling apart with Iran and, the possibility of strikes. And there's fear in the markets with job data and a hot PPI print. And then we've got all kinds of economic data that's coming out next week with, initial claims and unemployment rate and ADP and all that kind of stuff. And yet we saw strong bids come in, right, to the bond market, and very little trade out of the dollar in comparison to other markets. But in reality, we didn't necessarily see the little bit of a dash for cash that we were seeing, on Thursday coming into expirations. We actually saw some bond buying going on. So, and, some bonds and treasuries, even on the short end, it didn't get as hammered as people thought it would. And then of course there was buying going on, and, Robert Infra just shared a stage with him, and, a lot of what we're seeing in the bond markets is reflecting what the Trump administration has set out as a goal, right? Especially for housing. bringing the long end down. TLT looks great. Like, it could pull back, meaning that we get a little bit of a sell off in the long end, but which would result in rates climbing a little bit here, but not. I think it'd be pretty short lived. It actually looks like on the macro like a weekly, and I can actually go to TLT right here. When looking at, we had a nice big gap up. This could use a retrace. It could still continue, maybe into 92s, but probably getting ready for a daily pullback. But it's more about the weekly here. This weekly is compression to, looking like it wants to expand at least to that 92 area, and then maybe a little bit of a pullback, and then head up to 95 and maybe even 100 over time. And that's buying, which yields come down. So, and TLT is just the iShares product that's the 20-year Treasury bond ETF. So it's a good vector for tracking long end, and many traders will trade it. So we saw a little bit of volatility in VIX. I mentioned in VIX, and I know I'm kind of bouncing around. I'm not really interested until we see markets either break down or hold the lows here. We can check really quick. Like I've said it so many times now. If this is going to roll over, we're going to see it with a sustained sell-off in Dow that's hitting across NASDAQ and SPY, of course. Dow being, basically Forex weighted at the top. And in this case, I just watch it carefully. It hasn't, it looks like it wants to distribute from here. It's right on support again for Dow. NASDAQ is above support, so it's got a little bit of room. And then, of course, SPY, same kind of deal. It's still got a little bit of room, but if it starts to fail below like 675, we're probably looking 670, mid 660s down to the mid 650s pretty quickly. And we would see, of course, likely the same thing happening. We would see the same thing happening with NASDAQ. And I think that would be kicked off if we start to see, we'll see it in Dow also breaking down, continuing from in its downtrend from here. I would give it room, but, spike in the lower second, no close below, hold the low. It's just kind of a wait and see game. And to be honest, like if it fails to keel over, it's going to resolve to the upside and just keep melting. That's the reality of things. But, VIX, kind of working this channel to the upside. If we see VIX cool down substantially, we're probably getting that mean reversion back to the basis on the dailies for NASDAQ SPY, and likely seeing Dow recover back to the upside as well, and maybe even pushing the top of the range. If we continue to see this, if we get an expansion below the 20 simple on Dow, NASDAQ, or SPY, we will see VIX take a nice leg up, because essentially getting anywhere below the range here and getting expansion below the 20 would be downside expansion. VIX will come up. So RUT, same kind of thing. Low side structure on a closing basis. It's got one low for protection around 25.64 or so, 25.70. It needs to break above 26.86, 2700. So it's kind of a wait and see moment. Not really surprising at month end, coming into the last month of the quarter. We have a lot of economic data. I think more people were kind of surprised by the bond market right now. I would say that I'm not surprised, mainly because this has been what we've come to expect. I think more of the surprise is that with the geopolitical tensions going in, we've seen, bonds sell off, resulting in yields rising. And we're not seeing that with the current geopolitical situation that's going on, and getting hit with the PPI hot read, the potential, and all the news surrounding layoffs and stuff like that. We're just not seeing the reaction that we've seen in the past. And I would argue that that's been kind of the administration's goal at this point. And it's probably going to, we're probably going to see some really interesting things between the Fed and the Treasury when the new Treasury head is in, whenever they actually get, that confirmed, I believe May, right? So, we're right around the corner from that, and that's going to be Q2. So, Q1's all about positioning for that Q2, and then we see where the rubber hits the road. And I know that recession fears are a big talking point right now, but you know, it, we'll see. We'll see. We're in unique times. Be happy that you're here to experience it because we'll be studying this for a long time. Um, I think that's about it. That's really all I wanted to check on. Like gold, push into the areas we talked about, right? It's 5,400, 5,350 to 5,400. It's kind of the next bigger area. If it can get above 5,300, it's probably headed towards 54 to the high here at 54.20 pretty quickly. Anywhere above there, we're looking, 56 on expansion, 50, 57, 58 region needs to hold the low at 48, 41, right? Silver, pretty bog standard stuff. We're starting to push to the areas that we talked about. We got our 90 to 92 hit. If it's going to get expansion from here, 95 to 96 right here is going to be the play. And then it's basically 98 to 102 up here by that upper third. That would be expansion. I'd beware of, I would even move up the criteria, like needs to hold 84 to 85 to get that continuation. If we start to see that fall apart, then this is coming right back into range here on the lows. Oil had a nice move up. Obviously, pretty a nice bid on it based on what's going on with Iran. And this is going to be interesting to watch. I've said that, I'd be looking 68 to 70, and that could be in the cards. One of the things that I was watching today was the close. It closed right on the high at 67.28. So we would need to see this push past and then close above it and not just hit 68 to 70 to get continuation. We would need to then see it hold around 65 on the lows here. And anywhere below there, I'd keep an eye on 63.60, 63 and a half. Otherwise, it's back to 62, potentially sweeping, $60 down here. Natural gas still plumbing the lows. I'll be honest, it looks like it wants to settle low, but it can stay down for quite some time. And again, we could still see the lower second down here around 250. I'd keep an eye on it above $3. It could get accelerated to around 350, and then above there, 390 to $4 pretty quickly. So just keep a close eye on that stuff. That's pretty much it. It's a hurry up and wait market. There is opportunities if you're willing to hunt things down. There's all kinds of different strategies that you can use. Intraday if you're an intraday trader, but there's not too much to bite on right now. Longer term, until we start seeing volatility pick up, especially for Bitcoin here, then I think the criteria will pretty clearly present itself for those of us that like to get positioned for a little bit longer term trade outside of scalps. And that's all I got for you today. You can find me now on the breakdown with David Gockstein, of course, at around 12:15 p.m. Eastern, 9:15 a.m. Pacific. I was on the breakdown this morning with David, just kind of talking about markets. Did a little quick breakdown of Bitcoin, and then from now on, I'll be doing that spot on the breakdown with David going forward. So you can catch me there. Next week, of course, you'll be able to catch me on all the normal spaces that many of you find me in. And of course, Monday, I'll be back to break things down. I think the last thing that I'll leave you with here is the monthly close. If we lose the 55 here, which is at 62, it's the low side of the range, right? 62 and a half, essentially. We're looking towards that 50, which is, going to be right around the 58 region. So I did want to point that out. Anywhere below there, we're looking the mid to low 50s, 52 and a half by the lower second to that $55,000. So which is where the lower second is, right in between there, around that 55K region. If it gets bad below there, expect the mid 40s by that 100 period exponential with expansion into it, which I think it's going to spell some changes. Quarterly, obviously, we'll talk more about this on Monday, but the quarterly's right at 55, and that's where you want to see the bulls hold up. If you want this to be a shorter period bear market with a little bit, less volatility to the downside. Otherwise, we're probably looking at some prolonged price action on the lows and some lower price targets. So you have a wonderful weekend. Have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. With all of that being said, Landy out. Take care. Talk to you Monday.